inside ourselves, dreaming about a thing or two. I often dream of you. Oh, honey, believe it's true.
Yo, what up?
Sometimes you're all alone, even when I hold your hand. You know I understand.
What up, Wellesley, Rhode Island? How you doing? Ty, Francisco, Kaiser, what's up? How you guys doing? Happy Friday. Happy Friday. All right. See what we are looking like for today. We just have a little bullish cross here on the 1 minute chart. We did get that price drop here early in the morning. That we were expecting yesterday. Okay, so that was right, that downturn that we were expecting here to this level around the $16.50 level, which is nice. And I think now we are ready to bounce, guys.
Off the floor and drinking tea, but she don't love me, that's news to me. I met your daughter the other day, well that was weird. She had rhinoceros shaped earrings.
Why are we going down? We are going down because I think that is just the last setup we have here on the cycle. Okay, it could have gone two ways, man. And I'm going to pull up the bearish scenario for the week because we actually tracked the bearish scenario very much alike. And that's very, very important, guys, because, okay, we have not crossed this range right here. We've been respecting this range for almost a month now, guys. And that's very important for establishing that support that we need to come back up. I am not worried at all. Let's go look at the cup and handle formation here on TA. All right, cup and handle still looking pretty good. We did enter a little bit in this zone, but this is just a macro picture here of that cup and handle, so it's not a big deal. Probably gonna bounce here and then start climbing up is the most ideal thing to do. I think next week is going to be very, very important. Again, because we did just trade sideways. Okay, So we're not getting any push to the upside or downside, and I think that is bullish, man. I like, why are we not just crashing down right now with the rest of the market? Okay, so again, I do believe that we have more upside to do. Here's the cycle. And we are still tracking it inverse. Oops. Okay. Some of these are very minuscule. You can't see them. How these height ratios are located here. But I still believe that we are tracking it inverse. And I think we are going to have a... Look at that. We're already getting some green coming in. That V reversal.
Was it just the best thing on my own? Well, I don't know. I'm no man. He don't think that this is right for me. Maybe not. Hey, I ain't caught. Baby, why you so angry at me?
Patty Mac, I don't know if you're referring that to me or like if you're just saying about that, about what everybody else is saying, but I don't have a prediction, man, date set. I have the possibility of that cup and handle that we've been talking about here for that quadruple witching date, because it makes the most sense. It makes the most sense for the quadruple witching dates that they have set. Okay, since I started doing this whole TA thing, man, I have not made any other scenarios here that do not land on this date right here, on this March, and it is around the $30 level that I have set. So that's what I'm waiting for, man. I think it would be the most ideal thing to do as far as the cycle goes. Okay, I happen to believe that we are tracking inverse. So if we're tracking inverse, the most likely scenario here would be upside in the short term, and I think it is going to be, you know, between this range, okay? And if we do get that cup and handle, it's easier to get a run after you've established that little projector pattern. Well, I appreciate that, man. I didn't know what you were like, if you were referring to I really do, guys. I really do try and make it a you know, looking at it from every perspective. I don't want to, like, look, I am hype, man, when it comes to hype, you know. When the setup is ready and things are looking good for the conviction that I have, either on the short term or long term, right? And no one is perfect, all right? We all make mistakes. I make mistakes. I'm not right, okay, like all the time, and that's completely normal. That's fine. It's just yeah, I think there is a limit to it for sure. You can't be that guy that's, calling a squeeze every single day, right? Or else things become very unfair, I guess, to the market, retail market, who just kind of takes in that bias, and I think I think that's unfair. But I think when the setup is ready, when the TA is ready, the cycle is pointing to the upside, I think that's completely fine to do that, right? All right, let's look at some things here. We're getting a nice reversal here on AMC, which is good. We bounced right at that 1650, and then we just bounced, dude. We went all the way up to 1730. That's pretty good news. How you doing, Joe? Veronica, how you doing? Yeah, I mean, rules, like all that stuff just doesn't matter in my opinion. They'll release it just to say that they're doing something. I don't know if you guys saw that interview with Gensler, but he was like, "Oh yeah," like they basically put him on the spot with a question, and he was like, "Yeah, we have this whistleblower like system or whatever, and like that helps, expose all these like things happening behind the door." And it's like, okay, but what are you doing about that? Like, I understand you have a system where people can come forth and, expose the system, but are you doing anything to actually change the structure, right? And that is the issue. The issue is that they don't do jack shit, okay? It's bogus. Chilling. I mean, look, I'm not going anywhere. I'm not going anywhere until this thing goes through. Okay? And I've said this before, man. It doesn't even matter if we do come down. Like, the conviction for me is the same until this thing happens. I don't care if it takes another year. Okay? I'm not saying that's going to happen, but like I said, I'm really, really convinced here that in the short term, we're going to get some sort of setup, at least. Whether that does, take us to, this takes us to the $30 level, and then we're just chilling it out here. Whatever, man. My setup here, I'm very, very convinced about this. Just again with everything that I've been looking into. But if things don't play out that way, and we do track, identical again, I'm not going to be worried as far as this whole setup goes, right? In the long term, I'm still very convinced, guys, that the play is there. All right, let's see. I have so many charts open, I apologize, but let's get to it, man. Let's look at some stuff here that we've been looking at. Okay. You know what? Let's pull up the AMC chart here, and let's go on the macro. 1 hour. Okay, so again, we are tracking the cycle. Okay, inverse. This entire thing, it's been tracking inverse. Let's also take a look at the parallel channel. Okay, we're still tracking that as well. Okay, and she's looking nice. Look at that. The way here to February. Still tracking that, which is good. I like to track everything that we're tracking in this channel, guys. Again, I cover it every single day to make sure that things are aligning and they're looking good for the next setup, okay? It's just coming back and checking that everything is okay, that nothing's been, out the zone, is trading a different direction. So we have one check here. The parallel channel is we're still in that channel. We're looking to break out at some point. But right now, they seem to be scared of the channel. They seem to be scared of this level, okay? This $21 level, $20.50. They don't want it to cross that, okay? And I'm talking the shorts here. The ones that are lending out the shares probably know that this setup is likely. And they are probably accumulating shares here, okay? Because they know that this is about to pop, okay? And that is what I believe. Look, we also have a rising setup here that could happen, okay? A little rising flag, triangle, ascending triangle, that could break up. Actually, this would make a lot of sense because how you can keep prolonging this forever, dude, if you know the setup that you're doing, okay, just like they did back here on this giant freaking flag. They knew what they were doing the whole time, okay? And they stalled the play for 6 months, 5 months. Okay, you can do it down here too on the micro, except this is going to be like a week or so. You can get it up here again. You can prolong this a little bit more. And that's why we got to be a little patient, okay? All right, so we do have this still in play. And let's look at the 3-month cycle now as well. All right, so the 3-month cycle, I'm gonna do a little refresher here, okay? Let's go over everything like if you have never listened to this, just because I feel like it's important that the people that have not heard about this, I think it's important that they understand how this works. So what I'm gonna do is I'm gonna draw a regression trend here, parallel channel, so that we can see what is happening down here, okay? I'm gonna draw it from here to here, and then we're gonna do this, okay? So there's our little parallel channel, okay? Tickles, how you doing, man? And then we are going to draw one down here, okay? All right, and you can see that they're basically the same in the way that they're parallel to each other, even on this zone right here. You can see that they're pretty close, okay, as far as this line goes, the way that it's tracking. Now, what we do here is we actually draw some lines, some vertical lines, and these lines represent what's happening here every 3 months, okay? This is 3 months here, this is 3 months here, and this would be the next 3 months, okay? What happens here is you basically take this entire pattern, okay, that's happening, and it's being replicated, okay, inverse to what's happening in the future, because what they did in the past, they have to replicate that inverse, okay, because if they go long, they have to basically that will be their leverage position in the future to short the stock, vice versa, right? If you go short, you have to cover those shares in the future. So that is how the chart is looking, right? It's looking that way because of what they're doing. And basically what we're going to do here, so I want to make sure these are the right trend lines. I don't know if these were the right ones I was using, but we are going to we're going to do the same ones as the cycle here. So we're going to move these here. July 15th, that's one, and then we're going to move this one. I believe it's mid-month here. Every 3 months is what we're doing. And then that's 3. Okay, so that's 3, and then 3 is coming up back here, okay? And 3 would be on March, on that quadruple witching, okay? I'm gonna clone that, and we're gonna move it over here. No, I'm sorry, it would not be on that quadruple witching. go. Okay. All right, now what we do is we take this pattern. Ah, I'm trying to get it to a T. No, I'm sorry. All right, 3 to 3 is what we're doing. 3 to 3. Why can't I get it, bro? Come on. Okay, I gotta move that one because that's not right. There we go, 3. There we go, 3. All right, now we take this over here and we mirror that, right? And then we have this happening back here. You see that? So this portion here is playing out the same. However, this one, this right here, this tail end is playing out a little bit different. And this is where it gets interesting because this is where so this is a 3-month cycle that you're seeing up here, okay? But then there's a 2-month cycle, and that's the one we're currently tracking. We're tracking this one, and I'm gonna paint it a different color. This one's going to be, we're gonna make this one green, okay? I don't know if you guys, or no, we're gonna make it a straight line so you guys can see what's happening. Okay, straight line here on the 3-month cycle, and then we're gonna remove this back here as well on this. Where is it? 15. Okay, here we go. Right there. That's the other tail end. Okay, so this is being flipped. So this pattern right here is right here, but it's flipped. Okay? You see that? It's flipped and mirrored because when you flip it, you're also changing the direction of the time. So you're flipping the time basically, which is, they do this to merge basically these technicals that are happening to make certain patterns. So if you want to make a wedge, you have to flip these dates. They're basically going to look almost identical, guys. This is why it's not a big deal to do so. It's just you have to look at it from a technical standpoint. What are you trying to do with the pattern? How are you trying to trick retail? Back here, they didn't flip it because they were trying to make a flag, and they succeeded doing so, right? And then they broke it down. So here, they're trying to make a wedge. If you don't flip this, right, you're going to get something different. You're going to get something like that, and that is not a, that's more of a double bottom. Inverse head and shoulders is what this would be. So that's not what they were aiming for. They flipped it. So that's my conclusion to something like this, and that's why I believe that over here we are just tracking it mirrored, because now they want to make a cup and handle. Okay, now that we know what's happening here, and I know the chart looks a little messy, so you got to bear with me. Okay, so now that we got this going on, we can come back here and sort of understand what's happening. Okay, so we take this again, put it here on this zone, again on the 3-month mark, and then we come down, right? And we try and look at it. Okay, are things playing out similarly? Well, we know that this pattern right here is inverse to what's happening down here, right? On this section. And this is what I'm looking at right now, because we're not tracking it as volatile as this is tracking. We're tracking more of this like steady move way up, which was originally what I was thinking from the start back here. I thought we were gonna have a sort of cup and handle that was pretty steady, right? But then things started to get kind of volatile, and I was like, you know what? It's possible we do track this 3-month cycle a little bit heavier in the spikes that are happening. Now, who knows, man? We might just stagnate here for a little bit and then get that major spike here to create a cup and handle on like the daily pattern, maybe. That is also a possibility, and that's why you're not seeing anything super crazy to the upside right now. But I think it's coming. I really do think it's coming. We are tracking this pattern right here. You guys can see that. Okay. and it's very similar to the setup back here. So my whole thing here is I'm waiting for this to basically play out to the upside. Right now, there's no sign that this is tracking the inverse of what's happening back here. And there's no sign that this is tracking identical. Okay, right now we're tracking inverse on the 62-month cycle. So make sure that you guys understand that they're different cycles, okay, and that when one is playing out inverse and the other one is playing identical, they could be tracking the same direction. So just keep an eye out for that. All right, that is this regression trend for you, man. I hope I explained myself pretty well with that. I do have a video on it if you want more information. I posted it probably a month ago now, talking about this regression trend with, I think it obviously a better explanation of it, but it's basically showing these little arrows up and down and how they're tracking like an IQ test is what I was comparing it to, because it really is like an IQ test, trying to figure out these patterns that are happening with these shapes. And it's pretty cool, man. It's a pretty cool thing. Let's look at AMC intraday real quick. Here's that cup and handle. We are going to just modify this just a tiny bit here, okay? Just to extend this, and just so these lines are okay. See, this is not, guys, it's not a big deal that it comes in and out of these channels. Back here is doing the same thing. In fact, I don't even know if I want to do that because these are coordinated with the dates that we have here. So it's very important that we don't really mess with this. This would basically suggest that if we do have a strong move up here to quadruple witching, it would take us up to about the $30 level before coming back down and making that little projector. And then once we have that set up, it's easier to come back up. TWE, when you say real soon, what actual time frame do you mean? And I don't mean short term, I mean real time. I've been meaning to ask that. Gotcha, or anything. Real soon about, are you talking about this regression trend that we were just talking about, like real soon on the direction that it chooses? The move up. Yeah, so the move up here, okay? And this is I'm looking at this from the 62-day cycle perspective. Okay, this is watch this. I'm going to take this pattern right here, okay, that we've been tracking here, okay? Let's paste it up here. And it always does this every single time. Okay, stop doing that, trading view. Okay, and then what we do is we flip it, right? Because if we're tracking inverse, we flip the pattern, okay? Now, if we flip this pattern, we can agree that, I mean, it's very, very symmetrical in the way that it looks on this cup and handle, okay? Very, very symmetrical. And this has been an ongoing thing here in the cycle where we have, well, the same thing happening back here, right? If you take this entire pattern, we'll paste it over here, and it's gonna mess it up, right? We bring it back here. Now, I talk about this a lot as well, guys. With the movements to the upside, the algorithm has a really hard time stopping this volume from happening, right? So when you're coming up, if the algorithm can't stop the volume, you're going to have noise in between. Okay, that's because you have that FOMO kicking in, okay? So some of those points are going to look identical, some are not. On the way up, it's very, very hard to keep that volume looking the same. That's why on these short attacks that you're looking at back here, things look almost identical, right? On the short attacks, they almost look identical, okay? Why? Because the algorithm is tracking to a T, okay? you guys can see these moves, right? Okay, this is the algorithm on the 62-day cycle. Okay, right up here, you can see it tracking identical because it doesn't really have to worry about people coming in on this play, retail, longs, and shorts, because they don't think the price is there yet. They still believe that the price is going to come down. But now, right, we're tracking at these levels down here, and we've been trading sideways, dude, for almost a month. This right here is, again, very dangerous for these shorts. Not as much for the ones lending out the shares just yet, unless they do take it down to these levels, which would be extremely stupid. But you know, if we do get this setup here, it'll be because of this. It'll be because of this, man. And that's why I'm just waiting it out here. We really do have some sideways trading here until this date, which is March 8th. And that is where we really start to kick off that ratio, right? That major ratio. Oh, okay. So you're asking, PS not asking like a MOAS, just no, you work in 62 blocks. Just wanted to see how the different time frames. Yeah, I mean, so the different time frames don't really matter because these are set. Okay, so for example, if we take this time frame back here, down here, we're going to take this date range from 18th all the way to March 21st at 3. So quadruple witching is on the 18th, but we always end the day basically at 3 o'clock, right? 344 days, or bars right here. I'm going to move this down a little bit. Okay, 62 days, and then you go on the hour chart, 688 bars on the hour chart, 62 days. Some of them are 61, some of them are 64 because of weekends, holidays, stuff like that. So as long as the bars are the same, that's the only thing that matters. If we come back here, it'll be a little bit differently. This one's 61. Okay, this one is 60. This one's almost 66. Look at that, because there's probably some sort of holiday in here. Yeah, Thanksgiving, Christmas, New Year's, everything's in here. So this one's going to be a little bit longer. But you get the point, right? 688 bars, and this is on the hour chart. But if we go to the daily chart, right, it's different. Now we have, 43 bars on the daily chart. And on the daily chart, it's a lot easier to really dissect this whole thing to where I don't even really have to explain myself as much, man. We're looking at this on the 30-minute chart, which is so detailed, so specific, and things are still tracking almost to a T. It would be like, dude, if I was looking at this on the daily chart, I feel like a lot more people, skeptical about this would be looking at this and being, like, bro, this shit's crazy. Like, it's tracking to a T. But I'm looking at it on the 30-minute chart. Most of the time, we will track things on the 30-minute chart, and that is where it just blows your mind even more that it's tracking that intimate, Yeah, I say intimate, okay? Because Amy likes to get intimate with the cycle. Patty Mac, yeah. So most of the time, things will be tracking inverse or identical, okay? However, there is a specific point in the cycle. And we do have the AMC scenarios here, and that is that blue pattern, okay? The blue pattern is the one that will basically track to a T every single time. As far as the volume goes, right? The direction, it's been very clear, okay? Guys, I do have the price up here as well, so I am looking at it just in case we do start to like go up or whatever. Just quickly, we did say yesterday that the 1650 level was very likely. Okay, we did hit that, so right now we're just kind of trading sideways. Expect that for the rest of the day. If we do start to rally towards the end of the day, that might also be expected as far as keeping the pressure very, very stagnating. Okay, all right. Let's go back here to the blue pattern here on the cycle. All right, we know that the blue pattern is that reflection of the June run-up. It's also a reflection of basically every pattern that you're looking at right now, okay? I always look at this one because I think this one's very important. This one came basically right before this major dump that we had back here, okay? And you can tell that by taking the price action of this blue pattern up here and shrinking the height, you can actually see a lot more very, very similarly to what is happening, right? The only time I have seen the blue pattern here play out flipped, okay, where they're changing the time frame to change the setup, basically, okay, has been down here, okay? We talked about how this pattern, so if I clone this and I bring it back here, okay, it's the only one that has played out flipped. And you can see that it's literally identical, man, in the way it looks. All right? Same freaking pattern. It's the only one that's played out that way. And the crazy thing about the blue pattern is that I'm not just taking any sort of pattern and comparing it to a random time frame. This is every 62 days to a T, okay? And that's the only reason I track this, is because this happens every single 62 days. And there's no pampering done with it, okay? Like, I'm not just taking this pattern and putting it right here, right? And telling you that it's tracking or anything. It's every 62 days, man. So it just makes you wonder, you know, like, why are things tracking this way? This one is flipped. Basically on every time frame, it's flipped. Direction is flipped. Why? Why are we flipping the tables here? Okay? It's just another way here to sort of look at the price action and what's happening here is I think the tables are finally turning. Things have not been tracking this way in the past. So I happen to think that we are getting ready to create a new cycle, or just say bye-bye to the cycle forever and squeeze, man. Yeah, Patty Mac, thank you for those questions. Bring them on, guys. I will answer everything I can here. I appreciate all the questions. Right now, you know, we're just chilling it out. Nothing crazy's happening, so I'm here for it, man. I'm here for it. Ooh, the SPY is getting a major reversal right now, and it's bringing the price action of AMC up. Do I see a triple bottom reversal? I do not, man. I do not see that. I do not see that because if we take a look here at the cycle, or I'm sorry, not the cycle. If we take a look here at just the pattern that's happening here with AMC. Not that it's impossible. It's possible. It really it is. But we have to consider the price action that we're currently in. We're at the $17 level. This isn't, you know, we're not trading at the dollar level. Like when you're a penny stock, or you're a stock trading at the $2, $1 level, it's easier to create patterns that don't make sense. Because the stock is very manipulated. It's very much in that range where there's not a lot going on. Looking at the technicals on the micro, so it's very, you know, it's doing really weird shit. But this stock is stable enough to be creating these patterns that are happening, these technicals, right? If I show you any other penny stock, man, or any stock that again is trading under that $2 level, you're gonna see some of the patterns on the daily, or I'm sorry, on the micro, and they're gonna look really odd. So if we did come back down, I just don't see how the setup would be looking good for AMC. I think if we came down here, like what are we making here, you know? Like what is this setup? So to me, it doesn't seem like that's something these institutions that are lending out the shares want to do. I think, again, that more likely scenario would be to just start to bounce to make this double bottom cup and handle, right, to start coming up. I think that would be the most ideal thing to do. What up, Jander? March 3rd. Not March 3rd, for sure. Not March 3rd. Okay. Here is that. Here, I'm gonna change the color of this because I think a lot of people could not see this yesterday. And I was like, I look back at the videos. I look back at my videos, man, just to make sure like the setup is good and there's not, you know, I'm not messing anything up. Yeah, this is the setup that we had, right? We were talking about as well. This perspective on AMC is just basically showing you how much, like, it's a time ticking bomb is what I like to call it. Okay, it's a time bomb. Why? Because this right here is, just think about it as a regression trend on the macro coming up and down. But there does become a price where things are like where you really have a little bit of room to work with. If you believe as a trader, if you are comfortable with the price action reaching a low, all you got to do is cancel out this frame right here. Cancel out this frame and then look and pay attention to the resistance line on the macro, which is the $77 resistance back here, coming all the way down and touching these other resistance levels, right? The only other scenario I could think of here would be like if we came back up and touched this and came back down. I think that would be the only way they could prolong this for a little bit longer. However, I don't believe this is going to happen because if we look at the macro regression trend and we extend this line, okay? If we extend this line down here and we go, let's go ham here. Let's go all the way to 0. We have until, and this is why it's a time ticking bomb, because now you only have until April 14th, okay, to bring the price down here, which is very unlikely. No fucking way they would bring the price down to $0 by April 14th. That's like impossible, okay? So unless, you know, the government stepped in and said you can't trade AMC anymore, which, I mean, you guys know what that would do, right, to the market? Okay, so the likelihood of this is, again, is all nearly impossible. So if we understand that, you know, and kind of accept the idea that this could be a bottom, then what do you have to work with? Because as you're nearing this zone, this line, things start to become really dangerous, right? Again, crossing this line is going to be parabolic, okay? It's going to be a spring, a nasty one, because we have not crossed this line in over 10 months. 10 months, okay? And once that happens, this is going to spike up like you've never seen before, okay? Because it's a spring. It's a spring that's been getting so tight. And what happens when it gets too tight and it breaks? It pops. It pops, man. All right? It pops, man. Yeah, we're getting a little rally right now here on everything. Everything is just like going up right now. Is it a bump? Is it a dump? We don't know. We don't know what it is. When Amy gets too tight, yeah, when she gets too tight, you will see those consequences, my guy. This is a little cone setup here, all right? She is getting tighter and tighter, man. And what else can you do here, man? You can't do much when you are coming so close to this. Like, really, tell me what else you can do, guys. And I'm giving you the worst case scenario too. If you want to respect this line down here that we have been touching here for the past, this has been for the past, like, what? September, October, November, December, 6 months, okay? Respecting this. I do not see how we can keep coming down here. Okay? So, like, this is over. This is over. You're gonna come near this thing, and you have to set up as an institution. You have to set up. There's no way around this. And they're gonna get ready for it, man. They're gonna buy some calls. They're gonna stop lending those shares. This is what they're gonna do. They are going to say, fuck you to the shorts. I'm gonna sell these shares now at ridiculous amounts of with interest. And you're going to see that utilization is going to stay at 100. Cost to borrow is going to go through the roof. And that is going to be that ripple effect that we're waiting for. And they're going to laugh. And they're going to say, ha, I played with your emotions this whole time. And they're laughing at you. They're laughing at me. They're laughing at the shorts. Okay? You guys remember that example that I talked about, right? How we were talking about that composite person controlling the price action. This little guy over here. With he's really a narcissist is what he is, okay? He's a narcissist. And he's lending out the shares to these little nasty bugs, okay? These little shorts. Okay? And then there's a little fish in the sea, right? That's us. We're just fishing it out. We're having a good time. We're happy because we're ready for this shit to go down. Well, they're lending out the shares to these fucks. They're just controlling everything. Like, I think they're cool and shit. They're going to get away with this. No, you're not. And then we're down here just chilling it out. We're swimming. Okay? We keep swimming. And just watch, bro. These guys are going to fuck these guys over so hard. And then who wins in the end? We both do. And you know where they're going. Okay. And that's basically what's happening, man. That is what's happening. That's the only explanation really for it. They don't have enough money to keep the price where it is if they're not lending out those shares. These guys are just looking at it as an opportunity. They have all the time in the world. And they know that in the end, they're going to make money anyways. The bugs and the banks get a bailout? No. So the ones that will get a bailout, okay, because, dude, look, there is Composite. Composite Man is the one that will probably get a bailout if he is getting screwed over, but it's unlikely that he's going to get screwed over. The little bugs, okay, they're not as important as you think. Okay, okay, bro, we're talking, okay. Go look at, let's see, Citadel. Let's do Citadel and then Melvin Capital as well. Those are the bugs, okay? So let's see how much money they have. So yeah, Citadel's in the billions. But then you have a freaking BlackRock and Vanguard, and dude, you cannot even compare how much money they have versus Citadel and Melvin Capital. Like, it's stupid. Like, even try and compare how much money. Like, who makes more? Obviously, BlackRock is like one of the leading institutions in the world. Okay. Yeah, market cap is 107 billion, okay? compared to Citadel. I don't even think they make it on the rank. I think they're at like 7 billion or something. Market cap is Citadel Capital. Oh, wait, dude, these guys are, wait, hold up, assets. BlackRock has 7 trillion. Okay, AUM. Yeah, and then Citadel only has 35 billion. Okay, so you can compare those two together. 35 billion to 7 trillion, okay? You can't even like there's absolutely no reason, okay, why we should even be comparing the assets of both of these because they don't even come close. All right? Now, the thing is, you have Citadel being one of the major market makers for AMC, for GameStop, for these meme stocks. They're the ones, why? Because they have risk. They have a higher risk tolerance, okay? Meaning that they are able to risk a lot of their positions for something like this. Hedge funds are known for the risk, okay? Not like other institutions, right? Like mutual funds are not as risky like the whole financial system and financial institutions, like there's reasons why hedge funds get basically destroyed. It's because they go too risky on certain plays, and then they're gone. They vanish, right? We've seen this happen in the past, guys, where, you know, back with the whole GameStop thing, we had a lot of different institutions get crushed along the way and disappeared, right? Talking billion-dollar institutions. Tickles, there's an interesting video you can watch about BlackRock and their AI program called Aladdin. It's mind-blowing, I think. I think it said BlackRock manages like 30 trillion in assets or something crazy. Ooh, I'm going to have to look at that, man. Thank you for the recommendation. Appreciate it. I'll definitely be taking a look at that. Okay, let's see. Let's take a look at Amy real quick. I will get back to you on that, man, as well. We are at 1696 here for intraday. Let's go on the 1 minute. Yeah, look at that. Amy's price action right now. Okay, let's do something real quick. Let's look at the price action for AMC for the coming week, okay? Because right now it's very likely that we do get this sort of wedge pattern, okay, for the rest of the day. I don't know how much they want to bring it down or if they're going to bring it back up. That might be a likely scenario, sort of Ivy crush this entire thing, bring it down a little bit more, and then bring it back up around this $17 range. Now, if we look at it on the macro here real quick, see what's going on. Okay. Let's bring in the cycle back, and let's also take a look at what happened here in the past, because what we do here, guys, is that we track the cycle, but we also track previous cycles that are happening. So what I mean by that is the 62-day cycle, for example, that happened back here, we track that because it's very likely that sometimes you will see these patterns playing out inverse back here. Okay, so right now we're right here, man. This is where we're at. I'm gonna take here from red, okay, the start of red, and we're gonna take it all the way down here. Whoop. We're gonna do this entire pattern, and we're gonna flip it. We're gonna mirror that, right? Because that's the opposite of what's happening right now. If we take this back here, start of red, right? What do we got? We got this playing out right now, currently. So you can see it's a very similar setup in the way it looks. I'm gonna mess around with the ratio just a little bit. 21st at 3, so we know it's on the spot here. I'm gonna bring it up. Okay. And some of these, again, you're going to see playing out inverse. Some of them you're going to see play out identical, like right here. It's playing out inverse. Here it's playing out identical on this cycle, right? And then right here, there's a little bit of noise. It's checking a little bit more of what happened down here. And it's, to me, it's seeming to track more inverse than anything, meaning that the possibility of us coming back up here in the near future is very possible. So what if we do get that reversal here for the rest of the day, right? What if we do start to turn those tables and we start to come up, and then we start tracking this cup and handle, right? We start to come up here to the $22 range on Tuesday, and then Wednesday. I mean, dude, this is not out the books. This is not something that is impossible. It's very much possible with AMC and what's been happening. We did just have earnings, okay? Last time we had earnings back here, it took us a week before coming back up and making this projector pattern, okay? We had earnings on May 6th right here. And what happened? It took us May 7th, 10th, 11th, 12th, and then 13th we popped, okay? So that was 1, 2, 3, 4, 5 days, and we popped and we made a projector pattern, okay? We had earnings on the 1st, okay? Now, this is not something that I'm relying on that much, but I'm just giving you the sort of picture here, right? Earnings on the 1st, so that's 1, 2, 3, 4, 5. So that would be around Tuesday where we would have that pop as well if we did start coming back up, okay? Now, what do we have as far as this pattern goes? Because we did have that multiplication here that we did, right? We tracked this on a time 4 signal here, which also aligns, right, with that date, okay? Even though things don't look identical to a T, some of them do look a little bit off, which is fine, but you can see what I'm talking about here. This is a times 4 setup here. We take this off. What do we have here? We have this that's playing out, and then we start coming back up, okay? And if we did have something similar happen here, guys, you see that some of these patterns are more volatile, right? Like back here, you have a major spike. Now, if they do play out similarly, that is why I said that this isn't going to be a steady move up. Now, it's looking to be more like a volatile move up, okay? And we might see that here in the short term. But I think, I know a lot of people are upset, guys, that things aren't, you know, like we should have gone up on March 3rd and stuff like that. But the reality is, man, is that nobody knows. Nobody knows when things are going to happen. You can just have a good educated guess and try and put everything together. And get as close as you can to it. But don't ever let anybody tell you, man, that things are going to go down on one day and hype it up, because that's just the easy way to let your hopes down. And it's unfair. Again, it's unfair. So just have a good educated guess, man, and have a good risk, right, going into it for sure. All right, what's the top of that cup and handle? So the top on this cup and handle would be the $30 range. The reason I'm choosing the $30 range as a possibility is because on a symmetrical level, the cup and handle must reach that resistance before coming down and making a cup. Now, if you look at this half cup over here, what do we got? We got the cup forming, and then we have this handle, right? So if we did repeat this on a symmetrical level, it would look a little bit like this, right? We would have the little cup and the little handle. And I promise you, man, if you come back and you look at this on the macro, it looks like a pretty damn good pattern to me. It looks like a pattern that would make sense. You got this entire arc, okay, playing out, and you finally got the tables turning, okay, again, to slowly come back up. For AMC, okay, for a stock that trades like AMC, we just found out, okay, that a lot of retail still owns the float, okay? That has been a major concern here in the past, that there's not enough transparency. There's not enough things that they put out because they tend to be looked at as legal from like a CEO's perspective. They can't tell us that there's naked shorts. They can sugarcoat it, sure. And we have to figure that out ourselves. And that's what we've been doing here over the past year. We've been just trying to figure out what the fuck's happening. And I think we've been doing a pretty good damn job, okay? However, if things, you know, continue to come down, it's, again, they're going to be looking at these institutions. They're going to be like, guys, I thought we talked about this. You have to make it seem like this is just normal sentiment trading, okay? This is why I think it's very important that at some point the technicals will play out, because they need to make it seem like this is normal trading, okay? They need to make it seem that way. And I think bringing it down to single digits, it's always going to scream manipulation even more. So, you know, this is what's going to happen, man. At some point, the institutions, the shorts, the longs, they're going to come back and they're going to say, well, you know, we brought it up to this price and we covered or whatever, and now it's over. And they're going to basically tell you, like, I told you so. The people that miss out on the play are going to be the ones that lost their conviction somewhere along the way, and they're going to be like, all right, this play's over, blah, 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 and then they're going to squeeze it, and then they're going to bring it down and make it seem, right, they're going to make it seem like there was no manipulation happening, that this was all just retail and FOMO coming in, that there was no naked shorts. All of this is going to come back. I'm telling you, bro, because it's, unless the system decides to come in, actually step in and change what's happening, they're going to try and cover this up as much as they can, okay? All right. Amy, what are you doing? Let's look at, let's look at what we were looking at yesterday, which was tracking of Fourier transform, and then we're also going to look at, this is the Fourier transform right now, telling us where we are on this cycle period. I'm going to pull up this one, just the one I look at the most. And then we'll look at the Ethereum chart as well. Compare Ethereum Classic, because that's the one that we've been talking about here. How we're tracking identical right now. Let's make this blue, though. It's Fourier transform, okay. 4 hour, oh yeah, this one's like way back here. This is kind of cool too, though. You can even go back here in time, guys, on the Fourier transform. I don't know. Let's do from here to here or whatever, and that's around there. Should be around there. You can even see that, dude. Like, some of these run-ups, man, are very predictable, dude. If this goes down next week, dude, I mean, it'll just prove again that, like, if this cup and handle goes down, I mean, you got the Fourier transform basically telling you where you are, okay? And if things are likely to play out that way, that they might, okay? And this would be an indicator, okay, saying that, well, there might be that possibility that you do have some price action, some heavy price action happening around that date. And this is a year apart, by the way. Fourier transform on a 10-24 cycle period on the 4-hour chart. Okay, I'm going to take this off for a minute. We're going to take a look at Ethereum, okay? For those of you that were not here yesterday, I talked about just crypto in general. It was crypto and then how we were tracking Doge. We've been tracking Ethereum Classic in the past too. But there's a way that these track against each other, okay? We have this... Okay, we have this date range here, okay? Ethereum went up, okay, on May 5th, it peaked, okay? We peaked a month later on June 3rd. Price ratio was very similar, okay? But this was a strategy that these hedge funds used. They would bring up Ethereum, right? Days later, they would bring up the meme stocks, right? Then they would short that, bring up crypto, repeat the process along the way, right? You come up here, and I talked about how this is what they've been doing. They've been basically using this to leverage their positions on AMC, and because this is where they really screwed up. And I think crypto, since it's like decentralized, it's easier to pump something and dump it, right, than it is stocks, because stocks have options, derivatives, and it's just a lot harder when you have literally naked positions in a stock. It's very, very dangerous as a short seller. So they're using this as leverage. We've been seeing that, and that's why the price action looks the way it is. But we have come into a point in which we're actually following identical, okay? We have not done that before until this back here, which was February. And I posted this on Twitter earlier today because I do think that more people need to realize that we are tracking crypto in some form of way to help, right, these positions. I mean, I just don't see why these should be even tracking the same way, right? You know, how we were able to predict this price action, okay? If you were here on Ethereum, you could have predicted that run, okay? You have the same setup, okay? You got your projector pattern, the mid phase here, and then this early run up here that you can see on Ethereum if you really get intimate with the price, right? You got to come down here and really see what's happening. But there it is, right here. This entire movement up. And I think actually this is around where it started. It actually started back here in November. But I think where they really knew, like, oh, fuck, we need to do something about this, was right after this run. I appreciate you guys that already, like, know what's happening, that you, like, let me repeat myself, because I really want other people to know what's happening. I'm trying to help, man, as much people as I can with this information. Like, if you're new to the chat, I'm just trying to, like, you know, spread it out, man. See if that helps you in any sort of way to give you, like, comfort in your conviction on AMC. Like, knowing that these things are actually happening behind the doors is, I mean, it makes me feel better, honestly. It makes me feel better. I hope it makes you feel better. John, thank you, man. Yeah, I'm glad I could help out, man. Wherever I can, really. It's my, it's the passion here, helping you guys out. Okay, let's do a quick... yeah, let's look at AMC's EMA cross here on the daily and see how she's looking. Okay, so, oh wow, okay. This is the EMA cross, guys. that we were talking about yesterday. These are the percentages in which they rose or not, right, or fell in the past. Okay, so we do have, and I'm not looking at these back here because here we were kind of, again, not what was happening as far as the crazy movements that we had, right? So these are kind of irrelevant to me. I'm looking at when things actually started to kick off here in January, okay? This guy, can you help me? I can't stop buying AMC. I mean, how much help do you need with that, man? I think no help is needed at that point. Okay, is there any patterns you see in the volume? Yes, there are patterns in the volume. There are patterns everywhere, man. One of the ones that I've been looking at recently was that Thinkorswim platform that gives you the ability to study volatility on options. That is not something you can do here on TradingView. So they really do need to get on that. They need to get option chains in their system because I think it'll be a lot easier to study options with a stock like AMC and GameStop. These are, I think we would get way more information, man, looking at the charts of how volatility works. So I've been looking into it a lot more, man. When you get the chance, could you talk about shorts hitting max profits and what happens, what they do, like the risk of them continuing to short? So I think there's going to be winners and losers, okay? I think, again, these composite people, institutions, that are actually lending out the shares, they're the ones that are going to end up with all that money, man. They're gonna have the max profits, and they can do whatever it is that they want at that point. But I still believe that they are not going to risk their position. Like, once they have their money, they know that at some point, right, the stock is going to come down. They're going to take the opportunity to again play this whole game. But I don't think it's going to be the same way with a company like Citadel or Melvin Capital, because they're kind of going like all in here, man, in the way that they're trying to control this price action. And you can kind of tell, man, that these institutions lending out the shares don't really want a part in the way that these guys are doing things illegally. So I think once they get basically squeezed out of their positions, I mean, what are you going to do without capital, right? At that point, you're done. You are done. I think the markets are going to be completely different after this whole thing goes down. Things are going to change. People are going to realize that the system is very corrupt. It's going to be the downfall of a lot of different things, not just manipulation, but the structure of the markets are going to change for sure. Yeah, we are about to cross the 4 hour. I saw that earlier today. We did cross it red, but the only thing with this, man, is I'm not that worried, because back here, around the same range 62 days ago, we crossed red, we came back up, and this is where the algorithm kind of flips things a little bit. Here we've been doing it multiple times. We've just been stagnating. I'm really looking at that daily one, man, for the confirmation of a massive move. And this is the one I had posted. So we can come, right now, we're still hovering in between this zone here. So once we get that major push up, these are going to narrow down like that. I wish there was like a way I could kind of show you how these even, like, when they come close, how fast they come close. Let's see. I think there is a way, actually. Let's kind of compare this range here with this. This took about 20, and we brought the price action. I don't know, let's do something like that. Something like that would make sense. Yeah. So if this rose this way, here, going to 26, I think around this range here, mid-March 11th, if we come close to this $23 range, I think we would get really tight on that cross. to get that push on the cross here, that would probably take us to $30 here by quadruple witching. And that's very similar to this setup back here, except it's inverse, okay? So let's see how much the percentage would be, right? Because once you hit the cross, that's where we're looking at the percentage change. So if we hit the cross here at 23 and we go up to 30, that would make sense. 30%, 23 to 30. And then all of these are very close to that. 26, 30, 21, 27, 36. 30% would be very likely from 23 to 30 if we do hit that cross. This looks really good to me. I don't see, this is not bearish at all. Dude, we're just chilling right here. One bounce is all it takes. We're just chilling it out, man. They're not doing jack shit. Red Dragon, for sure, man, for sure. Look at the 1 hour. The 1 hour as well is getting tighter. Let's see. See the 1 hour. Yeah, the 1 hour is getting pretty tight too. 1 hour is nice. The 1 hour is good at determining like short-term movements. You can see here, green goes up. Sometimes when you're getting really, really close, really tight, like we are now, it's a little bit harder to predict that. But some of these are really nice at doing so, for sure. Is there a Fibonacci tool you can use horizontally that might coincide with your 62? Yes, there is. There is a Fibonacci tool right here. Let's see where it is. It's called a trend-based, a time-based. Here it is. Trend-based Fib time level. So you can actually use this, and it's pretty cool. These are nice when it comes to like actually developing these sections within the cycles and tell you when things are occurring right on that time frame, which is awesome. So here, I'm gonna move this here. You guys can see what's happening. See 3. Whoops. There's 3 here, and then this one would just be. So they work a little bit different here. I have to bring the cursor here because I can't see which one I'm controlling. Trend line, here we go. I have to like figure out which one is which. This is the peak at 3, and then this is that 3. So this is how they would work. And then it shows you again like these time frames. I have this one set up very particularly, so it's a little bit hard to read in this way. The thing is, Fibonacci is really good actually at predicting not only the time frame of it. I like to use more cycles when I do like something cyclical, so I use the half circles, and I've used these before to convert the fractals that we talk about. So this one back here, right, is converted using the time cycles here. Time cycles, and these are the little circles that we've been talking about. This one is better for obviously like understanding where things are in the cycle. But fib levels too, just in general, fib retracements are good at predicting like price levels, right, that are happening here. This is how I don't know if you guys have seen that setup that I had before the June run-up, but I did use fib levels to predict this run that was actually happening, and it was on not only the Fibonacci not the Fibonacci extension here on the fib time and the tracement to do so. That might be the case here if we get another leg up, which I've already got that zone, man. It would be around the 280, 260 if we did get another leg up. However, if things do get that ripple effect, that's not going to matter. The cycle is not going to matter. absolutely nothing is going to matter, and you make that decision, you make that call when you do sell wherever it is that you want to, because at that point nobody's gonna know, man. Nobody's gonna know where this thing is going to come back down. All right. What else can we talk about? I feel like I had something I was gonna bring up here, because there's so many things, guys, that that just kind of go hand in hand with each other. Just, you know, to make things more certain, you have to look at it from every single perspective, every single point of view, so that everything adds up and make, you know, not just one thing. Looking at one thing and calling it a day is boring, right? You need to look at multiple things. What up, Milo? How you doing, Milo? Milo. How do I pronounce that, dude? I always say Milo and then I say Milo really quick after. I'm like, dude, Milo or Milo? One or two? Milo. Milo. Okay, Milo. Goofy. Oh my god. That's hilarious. Okay, Milo. I'm doing Milo, okay? I think it's Milo. Love it. Love it. What up, dude? You got a perfect wedge here. Let's bring the volume in, see why we're looking. Oof, this is due for a pop. Most definitely due for a pop here on the intraday. We have a bullish divergence happening here with AMC. Okay, so you can see we got the volume decreasing as this wedge is increasing in price action. This is bullish divergence, which means that this is a bullish setup here. So at any given point, we are probably going to get a pop here. There it is. There's that pop. We had the cross as well, indicating that pop. And now what we need is a crazy, basically a pretty hefty increase in price here. Now, what I mean by that, guys, is like, you know, like crossing these resistance lines, right, to come up. Let's bring this triangle here. There it is. Okay, there it is. There's a little wedge. And then we have this down here, right? Coming down. So when these are inverse to each other, that is bullish divergence. And this is really good to study not only on technicals with volume, but when you're looking at like RSI, MACD, stuff like that. Those are pretty good at giving an overall representation here of the stock. Okay, if we get this cross here, this push up, it's likely that we, again, might test this. I always say again because I always say how we get a little projector pattern before coming back up. It's like a quick up, fake out, and then boom. Rally, right? Yeah, we're gonna have to rally. If this thing comes back up, we rally. When we rally, guys, we just feel it for Amy. We're like pumping her up. We're like, hey, dude, it's all cool. You know, you've been manipulated for so long. You need a little breather. We need to party it up, go out, get some drinks. Okay, that's what this is all about. All right, let's see. Oh yeah, another one that I look at a lot, guys, with these half circles, and I'm gonna bring up this chart right here so I can show you the half circles, because these are pretty important. Okay, we'll come back to Amy if she starts to rally. All right, we're gonna look at a 2-week half circles here. Okay, we're gonna take away the cycle for a minute. We're gonna take away this pattern as well. So much here, man. Okay. These are 2-week half circles starting from, obviously, the 62-day cycles you can see here. We have a little, whoa. How did that even do that? It was like spot on. Okay, here we go. 30-minute half circles. All right, so we look at this a lot here to multiply these patterns into larger fractals, because with options, you must convert the fractals to play out this larger technical pattern that you're trying to make. Okay, and it goes both ways. You can shrink the patterns too, right? If you're trying to compare something that happened back here to the short term, right? So one that we look at a lot here is this one. Okay, this one down here is a just a reflection of the entire cycle on the micro. So this is the 62-day cycle here in 2 weeks, done in 2 weeks here for you, this entire thing. And I'm actually going to take this entire pattern here, this entire setup here. Whoa. And this is 2 weeks, 1 month, 2 months right here, 3 to 3. Until May 13th, this entire pattern. This is actually the January cycle that we're looking at here. Now we're gonna go on the 2-hour time frame so we can convert this. All right, now we bring back the 1 month circles, okay, down here, and then we'll bring up the 2 month circles, which are correlated with the 62-day cycle, right, because they're 2 months. So all we got to do is stretch this pattern, right, to fit it against one of these. So what we're going to do is we're going to take this, and I want to multiply this times 4, okay? Because that is what we've been getting here as far as the correlation between this cycle and this larger cycle is a multiplicating this times 4. So we just stretch this, and now we have made this pattern into a fractal that is confirmed because you're not messing with the time on the macro scale. So what you do now is you're actually able to play around with this guy and find patterns, right, that actually fit and make sense. So here's one, right, because that is the cycle. You can see it down here as well. It's a little cycle that's happening, right? And not only do you get confirmation here that these are playing out the way that they are, right? But look, you got these major spike volumes here that are happening that you can see clearly on this portion. Okay, but where things get kind of crazy is, I'm going to take these cycle circles away. Okay. We're right here, and we can clone this guy, and we can move it around and see where, you know, things are tracking. Now, if I put it down here, okay, we have basically the inverse happening right here. We have these little, this little blue pattern here happening here, okay, inverse to each other, and you can see that. So I'm going to line it up right here. So we have this line up, and then this happens to correlate with this entire setup here that we've been talking about, right? This movement to the upside. And this would indicate, right, that movement right here around the 11th, which would be what's happening back here, okay? We also have one more, I believe. I think there's one that happens right around this range right here. We come back here. Again, these line up with each other. Let me see if that's the one that I was talking about or not. Where is it? Is it here? I don't know where the other one was, but it's somewhere in here. It looks the same as far as how these patterns track. But the ones that I really look at are these two, because you can see something happening back here as well as right here. And I mean, dude, look at this, playing out to a fucking T, bro. Okay, this entire thing to a T. So, I mean, yeah, patterns do repeat themselves, and fractals do repeat themselves if you catch them right, but at some point they will turn on you, and they will turn, like right here, for example, gave up right here. It came back, and it still predicted this run up back here. But I would say right after that, you start to get, you know, a different setup in what they wanted to do here, okay? They wanted that flag, they got it, and now we're in this wedge. It's sort of cup and handle coming in next year, okay? Looking the same. Yeah, Biden pump, be ready for a fall after. Oh yeah, dude, the timing of these is definitely released. In my opinion, it's definitely released on news for sure. For sure. You know what sucks? Is that the media will always stop that from getting out to the people. They will never let anybody know that this is a cycle. That's the sad part, is that freedom of speech, yeah, I can tell you what I feel, and if you want to feel the same way, you're entitled to, right? Just like you're entitled to your own opinion, but it's crazy because, you know, you can, like, there's so much evidence, man. So much evidence to correlations with the things that are actually happening, and how you can actually predict a lot of the price movements that are coming up, right? And it's just you know, people say like, oh, it's just regular market sentiment, like things are just meant to be traded that way. I'm like, no, if people were just trading based off of what they thought about a stock, okay, it wouldn't really look this way, man. It just wouldn't, okay? And I don't know, man. That's just the crazy part here, is that I don't think we're ever going to get, you know, that clarity that we want. I just, the whole system is so corrupt. And the only thing you can do is spread as much as you can for people to join your community and understand what's happening. And that's it, man. But that's something we just have to do on our end is, like, if people understand the word and what's happening, you know, we're doing our part. But the media has so much power these days that, you know, sometimes they stop certain information from getting out, you know, and it's just fucking sad. Okay, let's look at what time. Biden speaking now? Is that what's happening? No, he's speaking here in the next 5 minutes, I believe. I don't know. I mean, let me know in the chat if you guys want to hear that or not. I can pull it up if you guys want to. But if not, I can keep doing this. It's up to you. I mean, anything that has to do with AMC, I'm going to pull it up. We always talk about the SPY because it has everything to do with AMC, right? But I'm only going to pull it up if that's what you guys want. So let me know in the chat if you want to hear the Biden speech, and I will pull it up. And I'll talk in the background if you want me to. Well, how you doing, Dragon? Cameron, how you doing? Alex, hello. Mobond, yes, play it, please. Okay, we have 3 yeses so far. Keep it coming if you want it or not. Tremenda said yes. Thundax, thank you for answering questions. Hell yeah, man. Of course. One Shot said yes. Einstein, might as well. Hey, man, yes. John, yes. Okay, we have a majority vote of yes, so we are going to play that Biden announcement here, because I think the market will react to it. It will react to it for sure. Okay, we got most yeses. No no's. No no's today. All right. Yes, man. Sweetie, I like your style. Thank you. Thank you so much. Maquinita, if I say no, I'll be in trouble. So yes. Travis, yeah. All right. Awesome. Red Dragon, we need Amy to run up so we can jam to some fire music. Oh, yeah, for sure. For sure. Yeah, I'll play it. I'll play it. And whenever it comes up right here, I have it on live. I will start streaming it for sure. And then I'll put it in the background. We'll still be looking at Amy for sure. Will the market react to it? It just depends on what he says. Really all depends on what he says, for sure. Yeah, no, the level of manipulation, of course. You know what though? Like, this is the thing. You knowing this information, okay? It's sad that things are happening the way they are, obviously. But knowing the information does give you that advantage as far as like playing against their system. Basically saying fuck you, because like if you know this information and you're able to use it to basically play against their game, and that's why we're trying to like make people understand what's happening, is because if we're able to play their game and we're able to shut it down, okay, we're able to shut down their manipulation, right? That's happening, just playing against what it is that they're doing. And that is everything to do with these dates and these option expiration dates. Most people say like, oh, like don't do options, like this and that, and it's like, okay, sure, but there's a way to do them the right way where you can actually, again, mess up what they're trying to do on their end and basically make the inevitable happen faster, because you're playing against their game. So it's the people that don't really know what's happening and just kind of go YOLO on stuff like that end up getting in trouble, because they're playing and losing their game, basically. Yeah, Matt Slag, that's very true. The opportunity is there because, I mean, and it's weird to say it this way, but it's true. It's there because of them. I mean, if they didn't get into this play, AMC would not be a possibility, right? They're the ones that kind of made this whole thing happen in the first place, because they got themselves in a very sticky situation. And it just, I mean, it sucks to suck, man. When you cheat like that, I mean, it's coming for you, bro. Like, you cannot do shit like that. You cannot be that, person, right? That narcissist that is basically stealing people's money behind the door, just like cheating against the system, making a company go bankrupt, at their own will. Like they have no way to stop this manipulation, and it's sucky. Okay, we saw it with Sears, we saw it with Toys R Us, we saw it with Blockbuster, all of these different companies that got just shorted to the bottom, and who even knows how the fuck, right? They did it, man. Okay, right? Nobody knows because, well, there wasn't any eyes on that, right? Back in the day, there wasn't. All right, yeah, get ready for some volatility in the markets, though. If he's speaking here soon, get ready for that volatility. Yeah, that's all I'm going to say. Not financial advice. What happened to those FTDs? Dude, I don't know, man. I mean, the FTD thing was, for me, the way I look at FTDs, I personally think FTDs get covered weeks before. I don't think they get covered on expiration date. That would be too predictable. I've seen it happen in the past with other stocks too. The whole FTD thing, I'm not sure how that whole thing went down or whatever, but yeah, FTDs do not get covered the day of. You have to look at it weeks before. But we do have a lot coming up next week and the week after that, which means that they might have to start covering those very shortly, like in the short term, right? Patty Mac, what TW is trying to say is first the hedgied, now the wedgied. Yeah, now the to be wedgied for sure, for sure. Okay, I don't even hate the game. I just hate how it took me this long to figure out what was going on. Yeah, no, how it's being played. Yeah, that's the sucky part for sure. But hey, okay, let's stop here for a second. We do have the Biden thing
More
right here.
opportunities for America's workers. Our strategy is working.
All right, here we go.
Businesses are investing in American manufacturing at historic rates, and our economy added 423,000 manufacturing jobs since the president came to office. A good example of this success is Siemens USA. Siemens USA is a global leader in innovative healthcare, infrastructure, and energy technologies, employing 40,000 people serving customers all over the United States. Siemens is just one of many major companies investing in the United States, meaning jobs for hardworking Americans. At the helm of this corporation is Barbara Humpton, a woman who views the true purpose of technology.
She's got a big smile
as
on her face
expanding
too.
what's humanly possible.
Siemens. What?
Barbara most recently served as president and CEO of Siemens Government Technologies, where she was the leading integrator of Siemens products and services for federal agencies. She currently sits on the board of directors for the National Association of Manufacturers. And for these reasons, it's my pleasure to introduce Barbara Humpton, President and CEO of Siemens USA Corporation.
Very strategic, very good marketing in the name for sure.
Thank you, Celeste, and thank you, Mr. President, for inviting us to the White House for this announcement. And what better day than Employee Appreciation Day? You can see on the screens here we have employees from Pomona, California, as well as Grand Prairie, Texas. And you know, that for years, the questions about America's crumbling infrastructure has been, what if? Instead of just maintaining, what if we really invested in the next century of American growth and leadership? We now have the opportunity to answer this question thanks to the bipartisan infrastructure law. As the president said in his State of the Union address earlier this week, we're done talking about infrastructure weeks. Now we're talking about an infrastructure decade. And when we get to focus on today is not just what we'll build, but who will build it over this next decade. People like my colleagues joining us today, workers who support the industries and create the infrastructure that form the backbone of America's economy. Our teams in Pomona and Grand Prairie develop electrical equipment powering critical infrastructure systems, including electric vehicle chargers, data centers, and factories. Today, to meet the growing demand and to support national infrastructure projects, Siemens is announcing our plans to invest $54 million into these manufacturing facilities. Additionally, later this spring, we'll identify the location of a new EV charging manufacturing hub to support our goal to produce more than 1 million EV chargers over the next 4 years. All told, this footprint expansion, just this footprint expansion, it translates to nearly 300 new jobs. And we know there'll be more jobs still to come in our regional supply chains. Folks, a new era for manufacturing is now taking shape in America. Think about what we've experienced during the global pandemic. COVID-19 affected everyone, everywhere. But from the start, the response to it was local. We had to have readily available production and in-demand supplies. And as we've continued to address supply shortages of critical items, everything from PPE early in the pandemic to chips more recently, the future of industry we're now seeing is what I've been calling glocal. We've seen how essential global innovation can be, and it will continue so. But as supply chains have been disrupted, and we've also seen how important it is to be able to establish local production capabilities, we see that we can build resilience against future disruptions. But that's not all. Technology, from automation to digital tools to additive techniques like 3D printing, is strengthening the case for investing in American manufacturing or for globalization. It's strengthening the case for making things in America for American customers, leveraging state-of-the-art technology, and being able to co-locate manufacturing with research and development, just like we're doing today as we partner with national manufacturing institutes in Detroit, Chicago, and Silicon Valley. All of this leads to more resilient supply chains. I'll add that when Intel CEO Pat Gelsinger was here in January to announce plans for new US semiconductor plants, we heard Pat voice his support for funding the Chips for America Act to boost US semiconductor production. And I'd like to join Commerce Secretary Raimondo and the President in supporting targeted investments in research and development and in industrial modernization projects. We're glad to see bipartisan support for growing advanced manufacturing in America at greater speed and scale, and we urge Congress to take action. Let's continue to work together across the public and private sectors to build this industrial base. And I'll say this, we have some real work cut out for us when it comes to inspiring the next generation of workers to join in what we're building. At Siemens, we're actively recruiting for more than 2,400 jobs, open jobs today nationwide. Approximately a quarter of our hiring demand is in manufacturing, where nationally there are currently more than 800,000 job openings. So I'm looking forward to handing it over to Lonnie Stevenson, President of the International Brotherhood of Electrical Workers, in just a minute. But before I do, I want to share one final idea about how we build this workforce. Because I really think a lot of it comes down to addressing the myth we hear so often that investments in modern technology will relegate workers to the sidelines. Folks, for the first time, a human picked up a rock and used it as a tool. Tools and technology have elevated the role of humans. And the future of manufacturing is no different. It's no different even as we introduce tools which, frankly, I never could have even dreamed of when I started my career as a software programmer in the early 1980s. I mean, we actually were using slide rules back then. But today, in Grand Prairie and Pomona, they use our digital twin technology that was instrumental in supporting NASA's Mars rover mission, software that combines the real and digital worlds. And in Grand Prairie, they've also deployed advanced robotics. Yet what I saw when I last visited Grand Prairie wasn't fear of an automated future, it was actually excitement. Workers weren't being replaced. A new training program for technicians was teaching them how to program robots. Instead of being focused on repetitive tasks, workers were running multiple machines. They were programming the delivery of parts for the next shift. Multi-generational teams were working together to increase product, quality, safety, and speed to
All right, we
market.
need. Come on, Biden,
So,
get on this.
as our
No
infrastructure
disrespect to the
investment
lady,
leads to
but
new orders that spark transformation across American manufacturing, we're not going to automate people out of the process. No, I promise you, we will expand what's humanly possible. We'll expand opportunities for people at all stages of their lives, their careers, and education to shape a future that's more sustainable, resilient, and equitable. Mr. President, thank you so much for bringing us here today. And now I'd like to introduce Lonnie Stevenson.
Thank you, Barbara, and thank you, Mr. President, for the opportunity to be here today. And just let me say this before I get started with my remarks. President Biden said a year ago, and he was talking about bringing jobs back to the United States and good-paying manufacturing jobs. And more importantly, he says union jobs. And that's what we're here. We're here working with our partnership, the partnership that we're so proud that we have in the IBEW with Siemens, and see them following through.
all right, guys. I'm gonna bring this
having the
back.
opportunity with the infrastructure.
But I'm gonna wait for. I think what
They
Biden has to
expanded me.
say is overall what's going to affect the market. Until he starts talking, I'm looking at this. I'm going to just bring the chart back real quick for AMC. Just back up here real quick. We gotta. Need to bring back the minute chart is what we're looking at. Okay, so you guys can see that wedge, right, that we are currently playing out right now. Okay, and we do have that bullish divergence, meaning that this is likely to start coming back up. Okay, because we did break out, made a little projector pattern as expected, and now we're pushing up. Okay, I'm gonna leave this right here and then bring back that government statement we got going on here. Okay.
In supporting good-paying jobs for IBEW members that they can then support their families and have, comfort to know they've got good opportunities for them and their families. The Bipartisan Infrastructure Act has opened up new opportunities to invest in clean energy generation and building the parts that will modernize our roadways, bridges, transportation system, and the energy grid, which we're all part of that as well. And it's all going to be done here at home. Today's announcement proves in action that this groundbreaking legislation is already helping support American jobs and American manufacturing. Investing in our infrastructure and manufacturing industry also means investing in skilled blue-collar training. And the IBEW is proud to partner with Siemens in providing the pathways to advanced manufacturing careers in this industry. Union careers that won't just rebuild our infrastructure, but our middle class as well. As I have been saying for years now, IBEW members are ready, and I've been saying it for a long time, we're ready to get to work and rebuilding our infrastructure and growing a renewable building or energy economy, and we're excited to be working with our industry partners, such as Siemens and others, and taking the first steps towards a stronger, more competitive, and cleaner economy. So again, Mr. President, I can't thank you enough, and I want to give a shout out to our members in both California and Texas.
Nice
They're
shout
the
out,
ones,
baby.
the backbone, they're the ones doing the heavy lifting, the work day in and day out, producing for this country and making us a better country because of it. So thank you to all of them. And next, I have the really distinct honor to represent our next speaker, IBEW member, Johnny Lee. Johnny, I think you'll see when you hear from him, is dedicated. He's a hard worker. He's very well respected amongst his peers, his workers, and he also understands that he wants to make sure that Siemens is also being able to move forward and as the company and that they're successful as well. So please give a warm welcome to Johnny Lee.
This guy trying to fit in, man. That shout out. That's hilarious. I love it. I love it. I love it.
Good afternoon. My name is Johnny Lee. I stand before you as a proud member of the IBEW Local 220 in Fort Worth, a proud employee of the Siemens Grand Prairie facility, and a living embodiment of the American dream. When my parents fled communist Vietnam with nothing but the clothes on their back and the hope of a better life, they never envisioned that one day their son would be introducing the President of the United States. What they did know was the hope and
This
promise
is
of
the
America.
Made in America
The
commitments
idea
that
with a
Biden
little bit
has,
of hard work,
by the way.
everyone can succeed.
They're trying to.
Through their support of my involvement with my local union, I am proud to say I have found success in achieving that dream. I built a life that I love, one filled with peace, pride, and the opportunity to serve others. As a shop steward and a Vietnamese interpreter within the...
All right, I'm gonna just mute that for a second. We're gonna come back to TA charts here until Biden starts speaking. I think that is what's going to either cause. I mean, this might not do much to the market, guys, but if it does, Biden's going to say something, man. You already know how it is. We look at Biden speaking, or Gary Gensler, or I mean, you got the SEC going on. I mean, all of these things typically affect the market in pretty drastic ways. So until he comes back up, I'm going to just kind of leave it on the side here. We'll keep on looking at Amy here, because obviously that's what we're doing here in the chat. We're trying to study Amy here. Okay, so going into the end of the day, I'm just looking for a pop here. And price action coming back up. We might reach that $1750 level, and then if we do reject this resistance, so we are getting that candle coming back up. We do reject this resistance back here, then it is likely that we kind of trade sideways until the rest of the day. But if we do push higher, okay, then 18 is not far out of the picture. All right. Oh, he's live now. Wow, that was quick.
Happy birthday, kid.
That was very quick. Okay.
And Johnny, thank you. Thanks to all your coworkers. I just had a chance to meet before you all came in. And I want to thank Barbara Humpton, Siemens. Lonnie Stevenson, president of the IBEW, one of my closest buddies, and he's been my friend for a long, long time. Earlier this week in my State of the Union address, I said there was something happening in America, starting with historic economic recovery that we're seeing right now. And today, we've learned that in February, our economy created 678,000 new jobs. 678,000 new jobs. Over the course of my presidency, our economy has now created 7.4 million jobs. More jobs created in a 13-month period than any time ever before in our history. And we've learned that in February, the unemployment rate fell to 3.8%, down from 6.4% the day I took office, beginning in 2021, which is the fastest decline in unemployment rate in recorded history because of all of you. And by the way, before the American Rescue Plan passed, the Congressional Budget Office didn't project our unemployment rate to hit 3.8% at any time over the entire decade. Americans are back to work. Yes, family budgets are still tight, but a lot of Americans are getting paychecks this year more than they got last year, and restoring the dignity of work so they can show up at work with some pride. Job gains in February were broad-based across sectors, from construction to retail to manufacturing to leisure and hospitality. The decline in unemployment rate was broad-based as well. The fact that unemployment rate among workers without high school degrees fell to 4.3%, the lowest on record since we've been keeping records, 4.3%. It's amazing. Workers' weekly earnings rose in February. The people in working class sectors like transportation, warehousing saw some of the strongest wage gains. This is what it looks like to grow an economy from the bottom up and the middle out. Because of the progress we've made in fighting COVID, Americans can not only get back to work, but they can go to the office and safely fill our great downtown cities again and gaining more commerce. With 75% of adult Americans fully vaccinated and hospitalizations down by 77%, most Americans can remove their mask, return to work, and move forward safely. Today's news is a welcome reminder that we're coming back stronger as a country and as a people. You know, we've been through two of the hardest years this nation has ever faced. The pandemic has been punishing, as many of you know, and some of you may know it from a personal standpoint. Maybe you lost someone in this process. You got up this morning and looked at an empty chair. Well, it's been punishing, but we're coming back. And so many families are still struggling, though, to make ends meet because of inflation. I understand our top priority must be getting prices under control. Look, our economy roared back faster than most predicted, but the pandemic meant that businesses had a hard time hiring enough workers to keep up and production in their factories. The pandemic also disrupted the global supply chains. When factories close, it takes longer to make goods and to get them to the warehouse and get them to the store, and prices go up. Just take a look at cars. Last year, there weren't enough semiconductors to make all the automobiles people wanted to buy. They had a lot more money in their savings accounts and in their paychecks, but they weren't able to go out and spend it on leisure because of COVID. So what happened? They decided that they were purchasing products like everything from homes to automobiles to hard products. And the price of automobiles, for example, went way up. More people seeking them and fewer being made. And we have a choice. We have a choice. The way to fight inflation is to drive down wages and make Americans poorer, or have a better plan to fight inflation, lower costs and not your wages. The more semiconductors we make in America, and by the way, they were invented here in America. The semiconductor was invented in America when we went to the moon. And when we do that, when we
went to the
focus on
moon,
making sure that we make those again in the United States of America, so few are being made, we make a heck of a lot more cars. And you bring prices down. The supply chain is filled. Investment in America, rebuilding roads, bridges, airports, ports. We invest in innovation in America. That's exactly what we're doing. Look, as a result, we're seeing more jobs, more hope, and we're also seeing something else, the rebirth of pride. The rebirth of pride that comes from stamping products made in America. And we're seeing the revitalization of American manufacturing. And that's what I want to talk a little bit about for the next few minutes. Today, companies are choosing to build new factories when just a few years ago they would have built them overseas. They're investing right here in America. On this very stage, we were standing before Intel. The chairman of the board of Intel was here. He announced a $20 billion investment to build a semiconductor mega site outside Columbus, Ohio, creating 10,000 new good-paying jobs. A portion of them are the construction jobs, but the full-time jobs, the average salary in those places are going to be $135,000 a year. And if Congress passes the Bipartisan Innovation Act, Intel is ready to increase their investment from $20 billion to $100 billion. You know, as I said, we invented the semiconductor, but we haven't been making them in America for a long time. We had to import them. We had to wait. It cost more. And that's what I mean when I say dealing with the supply chains. Since I took office, companies have announced investments totaling more than $100 billion in electric vehicle industry for the future. The iconic companies like Ford, GM, new electric vehicle production, Tesla, our nation's largest electric vehicle manufacturer.
Tesla.
To innovate and inspire younger companies like Rivian, building electric trucks, Proterra, building electric buses. Last month, the MP Materials, which operates the only rare earth mine in the United States, announced a $700 million investment by 2025 that will have have a fully domestic end-to-end supply chain for the magnets that are used in electric vehicle motors, wind turbines, and defense systems. We're investing that money here in the United States. And the Union Pacific Railroad announced the largest purchase of American-made battery electric locomotives in history. And guess what? They're built in Western Pennsylvania. All told, the economy created 423,000 new manufacturing
This guy
jobs in
is
America,
pumping the market or
paying
something.
decent salaries just since I entered office. There's also another reason this is happening. We're not waiting for others to manufacture the products we invented. We know what to do. We know how to manufacture things in America. Today, that progress continues. I just had a chance to visit and have a viral tour of both the Siemens facilities, one in Pomona and the other in Grand Prairie, Texas. A chance to talk with some of the IBEW members working there, because our infrastructure law provides $7.5 billion $7.5 billion to build a national network of 500,000 electric vehicle charging stations across America. And it also provides $16.5 billion to modernize our power grid, how we move electricity across America. Companies like Siemens are investing here in the United States of America. And you just heard from Barbara, Siemens is announcing a $54 million investment to upgrade and expand those facilities in Texas and California that develop high-tech, high-value electrical equipment that is used in electric circuitry, switchboards, electric vehicles, chargers out on the highways, and data centers. This announcement alone is going to create 300 new good-paying, cutting-edge manufacturing jobs. Folks, America's coming back. It really is. In addition, Siemens will be building an entirely new facility to make charging equipment for electric vehicles. The location of that facility will be announced later this year. I don't know where it is, so don't ask. A lot of my colleagues in the Congress are going to be saying, Joe, where's it going to go? I don't know. But it's going to be in America and help us continue to grow our clean energy economy. Look, folks, when I ran and got elected, I said I wanted to rebuild America. This is what I was talking about. And we want to see a lot more stories like this one. So when the taxpayers' dollars to rebuild America, that's what they are, taxpayers' dollars, we're going to buy American. Buying American products to support American jobs. And by the way, these are the best products in the world. The federal government spends about $600 billion a year in goods and services to fulfill its responsibility to the American people, from the Defense Department to healthcare to education and beyond. In fact, what's happening is the federal government is Siemens' largest customer, for example. Most people don't know there's been a law in the books for almost a century to make sure that your tax dollars support American jobs and American businesses. Every administration says they're going to use that law. But when it comes time to make these purchases, whether that's the deck of an aircraft carrier or a ventilation system in a school, the response often is from the government, we can't find an American company, so we need to issue a waiver and buy the product that was made overseas, not by an American worker. So Buy American became a hollow promise. Well, my administration, Buy American is a reality. We've created a Made in American office in the White House to oversee efforts. And you just heard from Celeste, who runs that office. My first cabinet meeting, I told everyone that if their agency wants to issue a waiver to purchase something for their agency and what they have responsibility for, they don't have to use they think they don't have to use an American company. Well, guess what? They have to come to the White House office and set up and explain to me why they have to post that request, why they have to do that. And they're going to have to post a request publicly on our sites so American manufacturers and business have a chance to raise their hand and say, no, I can do that. Here, I can do that in my shop, in my town. Today, we're going even further. I'm announcing the biggest change in the Buy American Act in 70 years. Right now, if you're manufacturing a product that gets purchased by the federal government, the law says that has to be substantially, all of that product should be made in the United States. But because of loopholes over time, You know what substantially all means when I took office? If 55% is made in America, it's substantially all. To me, 55% isn't substantially all, it's slightly over half. Today, we're issuing a rule to raise the amount of domestic content required to be considered made in America from 55% to 75%. Substantially all is going to start meaning substantially all. And today, we're also announcing a new framework for critical products where we know we need stronger, more resilient domestic supply chains. We saw during the pandemic that supply chain disruptions can put American lives and livelihoods at risk. You know, when we needed the most, we were short on masks, gowns, gloves, ventilation, and other essential health products we had to buy abroad. So we're creating a new price preference. What this means is that if we're identifying some product that is so critical to our national security, health, or resilience, that we're going to create rules that allow us to pay a little more for them if they're made in America. We're talking about things like semiconductors, some pharmaceutical agreements, advanced batteries, among other things. It's worth it for us to ensure that we have a domestic capacity to protect us from shortages and price spikes in the future. And yes, we're going to keep trading with our allies and friends, and we're going to work with them to ensure every single country
crazy
can
stuff,
create
man.
global choke points for critical goods. Can't have those choke points. But we also need a resilient supply chains of our own so that we're never at the mercy of other countries for critical goods ever again. And by the way, when I say buy American, I mean buy all America. I want to increase the share of federal spending in goods and services that go to small businesses in America, the backbone of our country. Last year, I released a plan to increase the number of contacts that go to small disadvantaged businesses by 50% by 2025. This means more contracts will go to Black, Brown, Native American, women-owned, veterans-owned small businesses in every state and territory, in every industry from services to manufacturing to agriculture. Already we're seeing success. Women-owned businesses have won contracts to provide masks for the government, clothing for the Marines. Veteran-owned small businesses are now producing specialty trucks and trailers for the Department of Veterans Affairs and the Army. We're seeing other Buy American successes, which will allow us to make synthetic rubber gloves in Alabama, fibers that go into N95 masks in New Hampshire, shipping containers in Maryland. The list goes on. And here's what it all adds up to. Today, I'm placing a bet on America. Everyone here is going to make sure that it pays off, everyone on this stage. What I say today, what we've seen in the past months, is more reason why we need to reject the defeatist view that the forces of automation and globalization mean we can't have good-paying union jobs manufacturing here in America. Our manufacturing future, our economic future, our solutions to the climate crisis, they're all going to be made in America. And what that means to build a better America, well, it does. We're going to build a better America as a consequence. So thank you all very much, and I thank my colleagues for being here. And I understand a lot of Siemens folks are in the front row there too. Welcome. And thank you all in California and in Texas. Thank you.
Yeah, I mean, that was not bad. That was not bad at all, actually. Surprisingly. All right, let's get that out the way. I kind of like that. I mean, it is a lot of talk, but if there is action on that, I mean, if we do, transform over into a that sort of economy, man, where like most things are coming from America, I think we will obviously, like as a capitalist country, become stronger. So I mean, that's pretty cool. But yeah, that was kind of funny. That's kind of funny. All right, let's look at AMC for sure. The SPY didn't really react crazy to that. I don't think it really. I think energy sectors are definitely booming right now. You can see probably a lot of energy sectors were reacting to it. But that's the thing. I think Biden's some of Biden's approaches are very similar to what Trump had in the past too. So, you know, as a Democrat that he is, I think there's some of the things that they agreed on, I guess. But yeah, there was definitely, that was the Trump way when he was president. He was trying to do something like that. So I'm glad that they're on the same page there and trying to do that for the economy. But obviously there's other things that, you know, where it's like, whoa, like not at all. But AMC, let's get back to AMC, all right? So we do have a little bit of pressure coming down here. I'm going to extend this. So we're going to leave this trend line here and see where it goes. We did come up here and reject this zone right here. We did not cross that. So just looking at the overall picture, I'm not really sure what's going to happen here in the short term. I'm going to try and extend this wedge here a little bit more. Maybe like that, and see if anything happens on this. This is still a play as well. We have this resistance right here. So if we do bounce around this area and then, you know, come back up, we still have that wedge in play. I think that statement too was basically threatening like foreign trade, if you think about it, like, because right, I mean, if you depend on, you know, the global economy a lot, that can kind of bite you in the ass, you know, in the future. So I think just taking that, you know, step to transform the economy to a more, you know, less trade and shit will just kind of overall help. Not that we're going to stop doing that or anything, but certain things can definitely be dangerous if you rely too much on the economy for that. On the global economy. Yeah. All right, let's take a quick look here. It is only 12:51. We still have a little bit to go here for the day. All right, this is what we got so far intraday. Let's go back, and you guys are more than welcome to ask questions. I'm here to do that for you, but right now we're just kind of stagnating. Nothing crazy is happening, so I am gonna just kind of look at the macro picture here for those of you that are just coming in, and look at the charts, right? For what we are doing. We are still respecting this cup and handle. I just saw a question on that. We did come into this channel a little bit, but that's fine. I mean, we see that happen back here. These little points sometimes come back in and out. It's not a big deal. It's being respected, in my opinion, as long as we keep this level here and not cross this. So let me pull it up here. I think this is a good zone to respect here, the 1650, okay? And before having that bounce. We do have so I don't know if you guys remember talking about this setup back here. I'm going to pull up here. I'm going to go on the 30 minutes and pull up a setup on this, possibility on what could happen here in the short term, okay? So I'm going to take this pattern just because I can already see the similarities between the two. And I'm going to just flip it like that, okay? And I am going to fuck around with this just a tad bit here so you guys can see what I'm talking about. But a setup like this, or I'm sorry, hold up. We have to flip this. Flip. There we go. Setup like this is not impossible, okay? This would be ideal for AMC. If we do come back down quickly, and then here on Tuesday or Monday, we start coming back up, I think that would be the last time here on this zone, because we would break out once we reach that $21 level. We would break out of that channel that we're in here on that parallel channel that we've been here for the past couple of years. Breaking out of that and then coming back to test this level up here. And then, you know, make our way up and have more volatile moves to the upside. But I think this is good. I think this is good for AMC right here. Okay? Come back here on the 2 hour, and that looks pretty nice. Okay? We were talking about this beforehand as well. It's going to be that fractal that we converted. ×4 fractal. What else did I want to talk about? There was something kind of crazy that I was looking at here the other day, and I'm going to pull up this. Okay. Let's see. 2 month. Yeah, we'll pull up the 2 month. Okay, so this one was kind of crazy, but you can actually, like, and this is just speculation too, guys. It's not, I don't pay too much attention to something like this. It just adds on. It's like the cherry on top. You know, it adds on to everything that we look at to understand the cycle here. So here we got November, and again, this is taken from the start of the cycle, which is May 13th when we had that little projector, okay? So it also extends from here over here, right? So we're gonna take this. This is November 6th, okay? And that's the start of this cycle back here. So we're gonna actually do the entire run up. We're gonna do all 3 run ups here till July 15th, right there. Now we're actually gonna extend this. This is a 1, 2, 3, 4. This is an 8-month cycle, okay? We're gonna bring up the 8 month right here. And we bring this, you guys can see that it's 8 months. And we're gonna stretch this out. We're gonna stretch this out again ×4 because that is what we do. That we've been doing that for this cycle back here. We've been shrinking things, multiplying it ×4 or shrinking it ×4. Okay, so we're gonna extend this all the way over here. That. I believe this is the one I was looking at, but it's not confirmed or anything yet if it was this one or not. So this one goes back to basically, okay, watch this. ×4. And the cool thing here is looking at these run-ups and spikes to the upside. So you see one here, you see one right here that takes you up to this run-up, right? And then you start to see, for example, this range right here also merges with the other cycle down here that we multiply ×4 on this giant fractal, which is just indicating, right, that things do come close to each other when you merge the fractals, which is awesome because like they basically tell the same story, just on different. You're like looking at different fractals, right? Like, multiply this ×4 right here, like that, and then we put it together, and it almost like looks the same, right? On that on this time frame, which is pretty cool. So. I guess, where's the one I wanted to show you guys? There's one where I basically took this run up here on November 6th, which is actually the 9th when it happened. And I just took this pattern, dude, and I just stretched it like that. Okay? And it also lines up with this fractal back here. So now you have, like, it's just so crazy to me. Like, how these things line up from the run-ups to each other, starting back here, and then we still have this setup. Like, everything is pointing to this direction. Everything is pointing to this direction. So there's just so much in play. And again, this is more of like speculation than anything. I don't rely too much on this one, but just the fact that things line up on that, like the stars are lining up, is what I'm saying. And I don't know, it just makes the whole situation more believable, more having a little bit more faith in what's happening, for sure. Man, I love this song. Tame Impala. Okay, what else do we have? Okay, we did cross this on intraday here for AMC. The wedge. Okay, this was originally the wedge we had here. We came into that channel, right back down. Okay, so I am going to be looking at more of a, probably a range down here, get double bottom range here to the 1650 before coming back up again for the rest of the day, because this is 1 o'clock already. Typically, there is correlation between coming down early on in the day, before 1 o'clock, before it hits 2 o'clock, and then we start climbing up. I've seen this happen with Amy a lot on Fridays. It'll kind of pick a side, start coming down early, and then they'll bring us back up to Ivy Crush, the option chain. It's the AMC, yeah. Let's look at the January cycle. Oh yeah, I wanted to show you guys something kind of crazy too. So, you know how we're on this parallel channel? Okay. So what I did, and I was a little curious, man, with the price action here, kind of comparing all of these together. Like if we bring them up together like this, okay, on this parallel channel, you can actually come back here and do the same, but you kind of have to mess around with the ratio, okay? So what we do is, we'll take this entire thing like this, and we'll bring it right here, okay? Because that's where we are, February, okay? Now, you have to change the height here to kind of see what's happening. But look at this. Look at that. I didn't change the time at all. I just changed the height. And it almost, almost playing out, at least right here, with what's happening down here. This would be the only way that we would get that triple bottom setup that dude was talking about today. This would be a possibility if things do play out this way, but I did talk about how we were at lower levels here, and how typically on lower levels you will see kind of weird technical analysis playing out because the price is so low. So I don't know if that would be a possibility down here, but I mean, dude, look at this. This one also indicates upside here, coming up to like $30 on quadruple witching. Like all of these, man, all of these. Look at this. This is June right here. Let's see what June does, or March to June, right? This one also indicates upside. Now, they all started a little bit earlier on, so they were like this back here, okay? It's on a little bit earlier, and then this one would come up here in April, right? Too much, man. Too much pointing to the upside. No face cam today. No face cam today, man. I'm working on my camera. Should be getting a charger that is plugs in straight to my USB straight to the wall, so that I don't have to recharge that battery. So over the weekend I will get one, man. It's everywhere now, but who started calling AMC Amy? I don't know. I was just kind of got thrown into the community at some point. Probably Trey. I mean, Trey is one of the ones that kind of started this whole thing anyways. I'm sure he made that nickname at some point. Here's the next cycle. See how we can update this guy real quick. Once the next cycle, what it is basically it's the entire cycle that has been playing out. So if we bring up the cycle here, every section is shrunken into a to a 1/4 ratio. So this entire pattern that you're seeing right here is shrunken into one cycle, okay? And then you get this entire thing down here, where you guys can see that, right? That is what the next cycle indicates, and it's really good at least pointing out some of the fractals that are happening on that 1/4 ratio that we look at back here, but within this entire pattern. One of them that I look at a lot is this one down here. It's the tail end of what's happening, this whole thing. And there's multiple ones that happen on every single cycle. So this one that we focus on was basically predicting what was going to play out here towards the end of the pattern, right? Rolling over back here. And now what we're doing is we have this portion playing out. And this one is not really helping out like the rest have been. So I'm trying to understand the price action that's happening here. Again, just kind of indicating that something crazy is going to happen soon if things are kind of just, you know, looking a little bit different than they have been in the past. John David for sure, man. No problem. We do keep things pretty intimate here for Amy. I will at some point start covering other stocks once we are done with Amy. Once we're done with Amy, we will do more of that. I do also have a TikTok and a Discord channel. There, I do branch out a little bit more than I would here, but on YouTube, when we do lives and we do videos here, it's strictly just AMC. But on TikTok and Twitter and all that other stuff, typically will be a little bit more branching out for sure, man, if you want to look at some of those stuff. For sure. Let's see though. I did do this the other day too, man. The entire fractal here into a 1/4, which was down here. And then we have this, again, this tail end that's happening right now. And you can apply this to, you know, move it over here and would basically tell you where you're at in the cycle, right? And right now we are falling very closely to what's happening here, at least in the movements, right? So we have this sort of like inverse head and shoulders, right? This little, right? And that's happening down here as well. So you can kind of tell, like, on the macro and the micro, things kind of play out that way. But when you start to reach into this like zone that's more like downside, again, goes hand in hand with the cycle and the direction that it wants to choose. But here we might get the tables turning, right, where things actually start to play out inverse and actually play out to the upside. Why do I think that? Because here's a prime example. Here we have the pressure coming down, right, on the cycle. Whoops. All right, we stretch this up. You guys can see how these are basically identical to each other, right, the movements. But in between, you're going to see things play out inverse, right? Right here, for example, played out inverse. Right here, it played out inverse. Right here, it played out inverse. So me stretching this cycle out elsewhere is going to show you the same thing. And that's why I believe that even though we're tracking this identical right now, at some point, it's going to stop. Like, it's going to stop probably at this range, in my opinion. Just like we did back here, and then the tables flip, and we get that upside, right? Alrighty, alright. Alright, guys, we are going to cut the stream today. Just again, AMC is just stagnating, man. Keep a lookout for that 1650 level, okay? And I am going to post a video here over the weekend. We're still going to do a live session on Sunday, okay? So I'll be back on Sunday afternoon. I do live sessions now at around 7 o'clock p.m. Central, okay? So make sure you guys come to that. But thank you for joining the chat today, and you guys have a lovely weekend, okay? We'll see you guys and keep you updated. Join the Discord, TikTok, all that stuff. And I will do, yes, I do a Sunday pre-scenario for the week on bullish, bearish, and neutral, and I always update what has happened on the week, okay? So I will give you the last scenarios update as well, okay? All right, you guys, peace out. Love you. Bye-bye.